Hello everyone, how are you all? I hope you are doing good and I'm good as always. Why am I not smiling? Because I've been working on completing the classes. So we are going to f- we are going to cover the portion which was not visible in the previous video, and then we are going to complete this chapter number 2 in this video itself. Accounting process. Let me just check if the video is visible. Okay. Unit 1. Journal entries. So the process of accounting. What is accounting? Basically, journal entry is the language of the accounting. If you understand journal entry properly, you will be able to prepare final reports. Almost 80% of the accounts depends on journal entries. Okay, so process of accounting. Basically, journal entries is the first step which turns to lectures, which is your unit number 2, turns to trial balance, which is your unit number 3. Again, unit number 4 comes back to here, and also unit number 5 and unit number 6, rectification of errors, which is the accumulation of everything. Okay, and then adjustments, and then final values. This is the process of accounting. But sir, what do you mean by journal entry? Journal entry is, how do you do the journal entry? Just to go back based on source documents. What do you mean by source documents? Imagine you are doing imagine you are doing a business and you'll be like, bro, I'm going to sell you 1 crore rupees worth machine. Okay. And you sell just like that, like without any invoice or without any uh, proof whether you are paid with cash or whether he is a debtor for you. No, right? That is the source document. So, source documents are always available. From source documents, we prepare journal entry. And then this is the process. So, sir, 1 minute. So, if these cover 80% of the accounting, why is accounting difficult for some people? Because in CA, after you progress, we are not going to solve or the questions won't come like this. Even in CPT, they might ask you this and ask you this or this from this or this or this or this and adjustments to financial statements, etc. etc. So this is how accounting is working in CA curriculum, which is why it becomes difficult for some people. But with me, it is not difficult at all. Even though I take time, I try to be as simplified as possible so that you do not even have to revise it again or recall again. But since there is a scope of limitation in time, I am going to actually I did solve problems by myself, some of them, and I'm going to explain you the solved problems. Maybe after next batch or after some paid batches or whatever, later on, we will do by solving in class itself. In this batch, I am not going to solve. I am going to explain you the already solved problem. Already solved problem from ICAI material for some easy questions from ICAI material, but for some tough questions I will solve by myself, and later on I will explain it to you. So for journal entries, basically the system, write all these. Okay, system of accounting is of two types. First one, single entry system, and let me check. Okay, and then double entry system. We'll talk about this in incomplete records chapter. This is other than incomplete records chapter. Basically, this is everything. Yes, sir. What do you mean by double entry? Double entry means like imagine, close your eyes. You have a provisional store and someone came to you to purchase a pen, right? Or calculator. Calculator worth of 100 rupees. What do you do in double entry system? The logic behind this is double entry. Logic is you you calculate well and good. Take money. Oh my god. This is the logic behind the double entry system. For any transaction and every transaction, there is equal and opposite another transaction. Like you give something, you take something. But there are some twists like if you give free samples, there is a question in which in a journal entry they asked so and so company has given free samples and what is a journal entry? Free sample is basically advertise. Okay, anyway, let's not go there. We'll discuss this in we have discussed this in the whole video. You can go and watch it later on. Later, after double entry system, I will tell you my exclusive. I will tell you how to detect and how to not go wrong with the journal entries. Okay, this is basically modern approach itself. Basically, there are two approaches. Traditional, modern. For traditional approach, we'll discuss this later. Let's discuss this here. Modern approach, there are 5 accounts. What are the 5 accounts? Let's just to recall balance sheet and profit and loss, which are financial statements. Financial statements. And let's keep trading account aside for the time being. Expenses come here, income come here, balance sheet, assets come here, liabilities come here. These are things, these are the only accounts that are considered in modern approach. Expenses, incomes, assets, liabilities. Sir, one more is pending. What should we fill with? Maybe we fill with capital. So, and then in general, there are two accounts. Since I based on double entry system, Sir, what are two accounts? One is debit, one is credit. Okay. Sir, what do you mean by debit? What do you mean by credit? We'll talk about what do you mean by debit and credit in traditional approach. For the time being, remember, no, don't remember, just understand. Expenses are debit balances. Assets are debit balances. Okay. Incomes, liabilities, capital, or credit balances. Sir, how do we remember this debit or credit? Debit, credit, what is this? No, I understand you are starting to hate what is debit and what is credit, right? Let's make our hatredness towards accounting for knowledgeable purpose. Let's say we get the expenses, incomes. Write this, please. Balance assets, liabilities, capital. You know what? I don't want to teach you, or I don't like this accounting stuff. I'm more into GST, income tax, or any other. I'm just going to cross this over. Sir, what do you mean you are doing? This is very cringe. I know, right? Basically, this is debit, this is credit. All expenses and assets are debit balance. Incomes and capital liabilities are credit balance. Remember in this way. If you are unable to remember this. Sir, why do we classify debit? Why do we classify credit? The question of why is because of double entry system, first of all. Second, for every debit, for example, an asset, in order to increase the value of asset, for example, I purchased furniture for rupees 10 lakhs, right? After a few months, I purchased another furniture for rupees 10 lakhs, right? So what do we do? Asset. What balance does asset represent? Represents debt balance. Sorry, asset represents debit balance, right? So, in order to a debit balance of an asset increased from 10 lakhs to 20 lakhs. In order to increase debit balance, we debit the debit balance. In order to decrease the debit balance, we credit the debit balance. In order to increase credit balance, we credit the credit balance. In order to decrease the credit balance, we debit the credit balance. This is the logic. Sir, what are debit balances? Again, I'm telling you, debit balances are expenses, assets. So basically, what I'm trying to say is, for expenses and assets, if you want to increase the balance, you debit the balance, you debit the expense, or you debit the asset. If you want to decrease the balance, you credit an asset or credit expense, and vice versa. In terms, I hope by end of this entire chapter you understand basic fundamental of journal entries. I will complete this entire chapter in this video itself, as I told you. Liabilities, capital. This fundamental is very important. Okay. Again, I'm telling you, for a credit balance, in order to increase the credit balance. Sir, what are the accounts that come under credit balance? Incomes, liabilities, capital. These come under credit balances. In order to increase the credit balance, we credit the credit balance. For example, uh, income of I already have income of 10 lakh rupees for the month of June, and there is accrual income of another 5 lakh rupees. So what should I do? What will I do? Income is a credit balance. So I am going to credit the income account. Okay, this I am going to credit it. So it comes here. Okay. Later, traditional approach, right? In traditional approach, there are three PRN. Sir, what is PRN? P means personal account, R means real account, N means normal account. Just listen to what I say. Listen to the extent of the way I'm explaining. Do not go too deeper. Do not go too vague. Because as I go through the next chapters, next units and chapters, I'm going to follow modern approach, which is very easy for you and for me. Okay, just try to understand the traditional approach and keep it away. Uh, Confine this to this unit itself. Okay, for questions in MCQs. I mean, true false. Personal accounts. Basically, there are three other types of personal accounts: natural, artificial, and representative. Okay, in artificial, there comes bank accounts, etc., like partnerships, companies, etc. Natural accounts, you, me, etc. Representative accounts, I forgot the example, I will tell you later. I think provision comes under representative. Okay, we'll talk about this later. Uh, Debit, credit. Debit, the receiver. Credit, the giver. This is the logic of, no, not the logic. This is personal account, real account, debit, credit, debit. What comes in? Credit, what goes out? Nominal accounts, debit all incomes and losses, income expenses. I'm sorry, expenses and losses. Credit all incomes and gains. Sir, how do we remember these all things? Just to read the wordings. Try to by heart or understand these. I will explain you in simpler way. In P&L account, what are the items that come? Incomes, expenses. In balance sheet, capital, liabilities, assets. Right? Now you're going to allow me for simplifying the question. For any question that comes in the exam, just try to understand whether it is income or expense or liability or asset or capital. So I will explain, I will try to tell you the logic, the most possible uh, complaint, most possible mistaken thinking process. So there is a high chance that you might understand capital, right? You might also understand asset, okay? And think of it. There is a chance of confusion between expense and asset. There is a chance of confusion between no, there is no chance of confusion. Because if there is any liability, we receive something and we have to be liable about it. We understand this. Okay. So the only chance of getting confusion is expenses and assets. Keep this aside. The point is, uh, in profit and loss or trading account, all expenses come in nominal accounts, all incomes come in nominal accounts. keep this in mind, so that if you are unable to, for example, there is rent outstanding. What do you mean by rent outstanding? The rent, it is expense, right? Should be nominal. But outstanding means we are supposed to pay rent. We haven't paid the rent yet. We have not paid the rent yet. Till date, we should have been, we should have paid the rent, but we haven't. So it is a liability for us. We should pay in the future. It is our obligation. It is our duty to pay in the future, but we have uh, not to future. It is our obligation, but we have not paid, which is the reason why it is our liability. So it is not an expense, it is a liability. So what do you mean by liability, sir? Liability means, mm, so basically, I'll keep like what is liability later. Basically, all liabilities come in personal accounts. Most of them, nearly 90% of them. No, 99% of them. But here comes the asset. There is a twist here. Almost all assets come under real accounts, around 90%. Okay. If you find any account, just throw it, any asset, just to throw it to real account. But if there is anything related to bank, this is personal account. Also, if there are debtors, which means trade receivables, are personal accounts. I will, these are more or less, these are the things, and whenever you revise, there might be some things you just add here. Like I think prepaid expense also come under personal account. I don't know, I don't know whether I remember properly or not. So fundamentally, 99% of the stuff comes here are personal. Here nominal. Whenever you see there is an expense, there is a expense, right? Or income that come in normal nature. Any kind of provision, capital, liabilities, those all are personal in nature. There is a question, income tax, proprietor's income tax. Proprietor's income tax paid. It is drawing in capital. Okay. So these are the logics you should understand. Try to watch again if you are unable to understand. Damn. I'll just explain you three questions and then I'll go for a while. I'll just pause the video and take it again. Yeah. Oh, sorry. Okay. And then there is accounting equation I explained you, but I will explain you later. I'll tell you one more thing. Two concepts. First one, accounting equation. Second one, capital. You should take the balance sheet, assets, capital liabilities. Accounting equation is assets equals liabilities plus capital. Opening values, if there are opening values, asset equals liabilities plus capital. If there are closing values, assets equals liabilities plus capital. Okay, this is the formula for accounting equation. This is the accounting equation. Capital. Opening capital. Sir, what do you mean by opening capital? I will tell you. Plus minus drawings capital introduced during the current year. Plus profits, net profit minus losses. If there is a net loss equal to closing capital, please write these two and I will tell you. Periodicity concept, I hope you remember. For example, we start 1 4 26, 31 3 27. We prepare financial statements for this year. Okay. The P&L and then balance sheet. For P&L, the balances do not carry forward. I mean, the balances, I will just tell you, wait a minute. Uh, for P&L, net profit, uh, net profit, okay? Net profit, I'm sorry. Balance sheet, capital. Net profit goes to capital. Okay, just write this and remember this. This is another concept, not much relevant for you for now, but keep this in mind. It will be much easier for you later on. For every profit and loss, for every any income or any expense, at the end of the day, we find a net profit, right? For that net profit, it goes to the capital account, which is why profit and loss for the year ended. In that particular year, balance sheet as on date in that particular date. So in balance sheet, the values of all are carried forward to the next year. In P&L, it do not carry forward to next year, it carry forward to capital. Okay, so these are the balances, which means last year balances that are balance sheet balances that are carry forward to the current year are opening balances. And these are the closing balances, current year stuff. So this is the opening balance, this is the closing balance. Okay, I hope you have understood the concept and don't worry, we have covered all this. If there is increase, yeah. Okay, anyway, sorry. So for illustration, I will just instead of writing again, I'll just tell you. I hope you do not worry about my handwriting. This is the modern approach. Balance sheet, assets, liabilities, capital, P&L capital. For the modern approach, for the traditional, these are nominal, personal, real, some, person. There is a hack. Nominal do not come here. Okay. Closing balances. Illustration one. I'll just use this. What did they ask you? Show how accounts will be affected. R started business with a 5,000 rupees. Accounts will be affected. Business is started 5,000 rupees. Cash is increased and capital is increased. Okay, I haven't told you how general entries are done. I will tell you after three illustrations. Purchased furniture for furniture. What is furniture? Furniture is an asset. Asset has debit balance. Asset purchase means we got the asset. So increase asset by how do we I mean how did we acquire the asset? By paying cash. So cash is reduced. Cash is an asset. Furniture is increased, which is also an asset. Paid salary to his clerk. Salary increased means net profit decreases, cash decreases. Sir, what are you even talking? Let's come here. In profit and loss account, for example, the salary is 1 lakh rupees. It increases and net profit will be decreased by 1 lakh rupees. Okay. Which in turn, the capital will be reduced by 1 lakh rupees. As we talked about, is net profit directly goes to the capital. If net profit is decreased by 1 lakh rupees, capital will be decreased by 1 lakh rupees. So then cash will also be decreased by 1 lakh rupees. Why? Because we paid through cash. If I'm going to first, please let me know. Paid rent. Same example as the above. 3 and 4 are same. Received interest. Interest. You might not understand my Arabic language. So basically, for profit and loss, interest income, how much is it? 2000. As you remember, all incomes come on the credit side, right? Hope you remember. So, which in turn arises, net profit will be increased by 2000, which also means balance sheet capital will be increased by 2000, which means how did we receive interest by cash? Cash will be increased by 2000. It is an asset, it is an income. Okay. This is what they have asked in the first question. Please read the question again. I, question number two, question number two. Hmm. Even I don't know what I have written. Basically, please open the book, please keep book which I will just explain the answer. Basically, there are some missing figures. The missing figures are the opening balance they have given. Just summary. They have given opening balance and closing balance sheet, opening balance sheet given. So assets. Oh, wait. That is another question. In sorry, fixed assets, inventory, trade receivables, cash in bank. 12,800, 22,600, 17,500, 15,300. This is given in capital balance, loan, trade payables. Let me just check. Array. Capital and all are given, right? Capital is given, loan is given, trade payables is given. So what they asked you about the accounting equation 68,200. This is the total. So accounting equation is assets equal to capital plus liabilities. Asset equal to liabilities plus capital. Okay. So do this also. The difference between capital closing balance minus capital opening balance is profit. They ask you the profit, right? Now the question number 3. This is a bit more complicated, I guess. And it is funny. I'll just explain you the summary or let me just check. But they were given opening balance sheet, closing balance sheet. Dravid has provided you the following information related to the financials. Find out missing figures. Okay. Profits, assets at the beginning, not given. Liabilities at the beginning, 12,000. So closing capital is 35,000. This is closing balances. And the total liabilities including capital is 50,000. Don't you think the answer has come here by itself? Sir, what do you mean? I mean, this is given, this is given. This is 15,000, obviously. So this is the first thing. This should be equal to this. So this is also 50,000. So this is the second answer. Right? Now, they have given us profits and during the year 5,000. So as I told you about it, opening capital is profit equal to closing capital, right? Opening capital not given. X plus 5,000 equal to 35,000. X equal to 30,000. So this is 30 plus 12,000 is 42,000 total. Since this and this total are the same, it comes 42,000 only. Or as I said, 42,000. And this is the question you do in statement. Sir, what do you mean by statement from? Like A0 equal to L0 plus C0. A0 is, A0 equal to 12,000 plus 35,000 minus 5,000 capital. So you get A0 equal to 42,000. This is all. Write the closing balances also. Okay, this is for your understanding. I guess the first thing is done, and I told you I'm going to tell you how to pass the journal entry, right? Time 5:03. Okay, how much time did I take to complete? 40 minutes. Okay. Journal entry. For example, Michael Jackson purchased the ganja. Sorry, for rupees 1 lakh. Okay, this is a bad example. Furniture. Just decode what I have told you. Okay. Is furniture an expense or a liability or an income? See, furniture expense or an asset. What do you think it is? Okay, I'll tell you. Furniture is an asset. Either way, even if you think it was an expense, in financial statements it becomes an issue, but in the passing a journal entry it doesn't. Because these both are debit balances. So furniture should be debited, right? Sir, why should it be debited? Because the value of furniture in our books are going to be increased. So furniture account. Since asset is a debit balance, since furniture is a debit balance, in order to increase the value of furniture, we increase. I mean, we again debit. From debit to what should we do? What should we do? We have we paid the cash? Have we paid the cash? Sir, I don't. If you don't know, do not assume that we paid. If you don't know, imagine it was purchased on credit. Credit means Michael Jackson comes here. Imagine, sir, why are we doing this furniture to blah blah blah? This is the system. Just do this, like buy two. This is like a love letter. Accounting is a love letter. By who is the debit balance? To who is the credit balance? Okay. So stop this video here. I'm going to stop too, and after passing this video, continue that other video of from 53 minutes. 43 minutes have been done. Okay, take care. Bye bye. I'm going to continue lecture accounts from now. Maybe within 1.5 to 2 hours, I'm going to complete it till unit 5, and then unit 6 takes another half an hour to 40 minutes. Okay, bye bye. Take care. Wait. If I tell you take care and if I am unable to pause the video, it creates awkward situation. Let me let me do this again. Okay, bye bye. Take care. Hello, welcome back, people. So we are going to start with the chapter lectures. There are a couple of good questions in this chapter. I mean unit. I'm sorry, I'm interchanging unit with chapter. So basically, overview of the thing is lecture is also known as principal books of account. Okay, not your school or college principal. Okay, bad joke. Principal means main or core. Books of accounts, uh, the process of transferring journal entries. So we have drawn in the early video itself. Wait a minute, I'll just recheck whether visible or not. The screen is visible or not. Okay, done. So from journal entry to lectures, it is a process of transferring. I mean, sorry, transferring to accounts. What do you mean by accounts? Like I will just tell you later. difference between the totals of debits and credits in order to find out balance. And some of the balances are transferred to P&L account, and some of the balances are carried forward to the next year, which is balance sheet. P&L balances. Okay, this is the basically summary. So the format of the lecture is this. This is debit, this is credit. And basically, what I'm going to do is, while solving the problems, I'm just going to use the T form. Account name, debit, credit. But the detailing nature is date, particulars, journal folio number, not ledger folio number. Okay. And amount. This is the debits. This is part one. Repeat again part two. This is the credit. Just whenever you are practicing, just use the T form, and in examination, use the formula. So there is nothing more to explain. I will just oh, wait a minute. Okay, let's open the. We are going to discuss the problems in lecture chapter, lecture unit. We'll talk about illustrations later. First, we go to practical questions. So this is the practical question. Okay. They asked us generalize the following transactions and post them in the lecture and balance the accounts. Basically, they asked the process of journal entries and lecture accounts. They asked it these two points. Okay. Done. Okay. Why is this not properly working? Again, press on the anyway. Let me just pause the video. Hello again. Okay. I'll just forgot to mention the first question is very basic. We'll do the illustration first. So they asked us prepare the stationery account for the month of January 2022. So this is the format. Okay, follow this, not the way I teach you. 1 minute. So this is the debit balance. This is the credit balance. They asked about stationery account. So stationery account is written. Actually, I solved in the note, but okay, this is first things first. What is stationery? Stationery is kind of a small expense which is related to like pens and stands, small stands related to day-to-day business. This is better than miscellaneous. It is not exactly classified as miscellaneous. Okay. The definition of other expenses or miscellaneous expenses is given in Schedule 3 of Companies Act 2013. I hope I'm right. So, stationery account is an expense, right? Stationery is an expense. So, expense always has debit balance. What did they ask? They said January 1st inventory of stationery. This is lying. This is already lying. It is not a transaction. Lying as stock. It is not a transaction. So for this, it becomes to balance brought down. hold this. I will explain to you later because if you do not understand, I will just let me complete this question. To balance broadband. This is basically stationary account debit. Okay. Anyway, purchase of stationery by check. What is the journal entry? Again, classify stationery. It is an expense. So expense has debit balance. Whenever we purchase something, whenever we purchase something, uh, it increases the value by cash also, by bank. Check means bank. So when we purchase something through bank, our bank balance reduces. So bank balance, what is bank account? Here there are two accounts, stationary bank account. Stationary is expense. It is a debit balance. Bank is asset, which is also debit balance. So we are getting stationary, right? So in order to increase the value of stationery, we debit the balance. We debit the stationery account to bank. Since we are paying through bank, bank is a debit balance. In order, if you want to increase the bank balance, we debit the bank balance. Since we are paying the cash through bank, so our bank balance is going to reduce. Sorry. So our bank balance is going to reduce, which is why we are crediting the bank balance. So let me just stationary account debit to bank account. This is the journal entry. Just to draw this the way I'm drawing. Purchase a stationery and creditor. This is the same entry. Like instead of bank account, we put creditor. He is the creditor. We purchase stationery on credit from five-star stationery. uh, Stationery account debit to five-star. This is the second entry. Okay. So true balance brought down first entry. Remember this for the time being. To bank, this is a general entry. To five-star, this is a general. 800, 180. What is the balance? 2560. I'm not a mathematician. I just copy paste it from here. Okay. This is they asked for the month end, right? So now on the 31st, first 2022, right? Yes, month end. Here, okay, you might have gotten a doubt of why two are by chance. Hmm, I do say, if you remember in this video itself, I said, for example, the example, do you remember Michael Jackson purchasing ganja or furniture, right? For 1 lakh rupees. If you remember this, not ganja, it is furniture. So the journal entry is furniture. Michael Jackson, I'm sorry, 1 lakh and 1 lakh. This is a journal entry, right? Here, I told you to write by. If you remember, I told you account journal entries is like a love letter by and to, right? So on the debit side, we always debit side two comes and on the credit side by comes. Okay. By balance carried down. Sir, why is this coming here? Because in order to balance the amounts. Okay, in order to balance the amounts. 1 minute. So in order to balance these amounts, we do by balance carried down. And for the next month, let me erase this. And for the next month, stationary account to balance brought down comes from balance carried down to balance brought down. This is how accounting balances travel. Okay. So let's get to the question of practical question number one. So the 1 minute. Okay. Okay. So remember journal entries is the basis for this entire chapter and the entire accounting. Okay. So also started business with a capital of 20,000. They asked you to do to pass journal entries and post ledger balances. So also started business with a capital of 20,000. Business started. Okay. Basically, you should write the narration. Okay. Keep that in mind. So cash is the debit balance. Cash is the debit balance and capital is the credit balance. You remember? We just cross this over and in the balance sheet, capital and liabilities come and in the assets come here expenses, here incomes, and we talked about these are the credit balances and these are the debit balances, right? So the journal entry is capital to cash to capital. So these are the journal entries you pass, or I will just briefly explain since these are the very basic questions, basic entries. Purchased goods on credit, purchases to Y, purchases to Y, because I'll just explain you this only entry. Purchase is an expense and expense is a debit balance. So purchase is debited, account debit to Y. Y is a creditor. We purchased by not way of cash, but by way of credit purchase. So creditor is a liability for us. In order to increase the balance of liability, we credit. Okay, which is why we credited here. This is another journal entry. Paid cash to Y. So here, I'll tell you the logic. I will tell you two logics. Since the cash is paid, cash is an asset which is reducing from us to us to cash. Cash is an asset which is a debit balance, so we are crediting because we are going to pay cash. We are paying cash. Who is the creditor here? Why? Why account debit? I will also tell you the reverse logic. Y is liability for us, right? In order to reduce the liability, we are debiting Y. Why are we reducing liability? Because we are paying cash. Either way, you can apply the logic or you can apply both the logics. Sold goes to Z. Who is Z? Oh my God, I forgot everything. We are selling goes to Z on credit. Okay. So Z is debtor for us. Debtor is asset for us. Asset is debit balance for us. Two, sales. Sales is income for us. Income is credit balance for us. Okay. Received cash from Z. Like cash is increasing in our company. So cash account debit to Z. Okay. Purchased goods from Y. This is the same logic. Purchases to Y, paid cash to Y, Y to so and so, so and so, so and so. Okay, these are the logics. So after passing the journal entry, how do we post in the ledger balances? God, power of English. Shit. Okay. So how do you post in the ledger balances? That is the question here, right? So the first thing is I wrote the most important step and the first step, and there is only one step here. Draw all the accounts that are given in the question. Sir, what do you mean by draw the accounts? It is not an rocket science. Okay. Just whenever you without journal entries, you cannot post in lecture balances. Okay. We are in so beginning stages, we cannot apply the logic of directly posting in the lecture balances. Okay, we should and should at least until CSI entry, you should form the journal entry before the lecture balance. So these are the what do you call? These are the accounts. So cash account and capital account. Just to draw cash and capital. Just like I don't have this cash account, capital account, and then purchases account. That is how I have done. And then Y account, and then Y account is the cash account is the sales account, Z account, sales account, Z account, and then cash is Z purchase Y cash, Z sales, cash Y, Z. These all are in our already we have created accounts. Cash to capital, cash account debit to capital. Basically, fundamentally, technically, cash account debit through capital. Okay, and this is double entry system, mind you. Okay, I'm again explaining to you. Capital account is credited by cash account. This is the first point. Okay, I have written numbers also so that you can cross check later on. For example, second purchases to wire. Where is the purchase account? Purchase account debit to wire account. And then we should go to wire account. This is basically this is from like English active voice and passive voice. This is active voice. We go to passive. Wire account is credited by purchases. Third one, Y to cash. Y debit to cash. Y account debit to cash. Cash is credited by 5. This is the third one. And then fourth point is sales to Z. Oh, wait a minute. I must, there is something issue. Wait. Fourth and right. Z to sales pro. How come can it be sales to Z? This is awfully mistake. Sales is a income. So credit balance. Z is debtor. So debit balance. Z to sales. Okay. I think I have written properly. Says Z to sales, right? Z account debit to sales. Sales is credited by Z. Okay. Cash to Z. Cash account debit to sales. Cash account debit to Z or sales. Z. So, and Z is created by cash. Z account credit by actually cash 6,000. This is the U. Randomly pick 6, 8, 9, 1, 7, 10. Let's check this. Y account debit to cash. Y account debit to cash 2,000. Cash account is credited by Y 7,000. Okay. After passing all the entries, write all debits minus all credits and the balance list just a total whatever value is the highest value. Okay. And then uh, just to balance them. But by balance carried down is the amount which is the closing balance. This is fundamentally closing balance. If you do not understand anything, I'll just explain you. Just take a clean account. Basically, cash account is there and 10,000, 15,000, 20,000 are the debit balances and 10,000, 15,000, 10,000 is the credit balances. So what do we do? 15 plus 10, 25 plus 20, 20, 20, 45,000 is, sir, how do you know that this is the higher value? Just add all this 10, 15, 20, 5, 34. Okay. So debit balance is 45, credit balance is 35. So what do? We add 10 here by balance carried down. So it comes here to balance brought down in the next month or the next year, whatever. Okay, this is a balances are done. This is the opening balance. I hope you have understood till now, even though I'm going a little bit fast. Oh my God, what are these? What are these? What are these? Okay, and then there is illustration two. For illustration three, I think I have done in the two kids. File. Let me check. Where did I do the third? So, okay, let me just complete the second one right now and check the third one because I have noted somewhere beautifully. What is the second question? I mean, illustration number two. First one is done. This is the second question. Please let me prepare the ledger accounts on the basis of the following transactions. Prepare the ledger accounts. So they have asked only ledger accounts. Debit balances. Cash in hand, cash at bank, inventory, building. Vijay is a debtor and Madhu is a debtor. These are the debit balances. So first of all, what do? You open 6 debit balances. 1, 2, 3 inventory, building, Vijay, Madhu. What are these? These are the opening balances of creditors. These are the credit balances. So they have asked about the journal entries. These are the journal entries that we should post in the lecture. But this is a kind of, there is discount element and cash discount is also there. So we should be aware of it. So just to pass the journal entries first. These are the journal entries. Like first question is what? Purchase goods worth the 5,000 with the cash discount 20, cash discount 5%, trade discount 20%. Purchases to cash to discount. Okay. In trade discount here itself we subtract. Okay. In cash discount we reduce from the cash. First one is done. Second one received 1980 from Vijay and allowed in 20 as discount. Keep discount away for the time being. Received cash from Vijay. Vijay is who? Let me check. Vijay is a debtor. For 2000 amount, we received cash of for 2000 in order to close his balance. We write 2000 and cash is received 1950 or 1980. I think it is 1980. So cash account debit to Vijay. How about the other 20 rupees? We allow discount, right? Discount account. Also, in another way, discount allowed is in a way it is a expense for us. Also, debit balance. If you do not want to remember this logic, I will just tell you. Cash account. How much is the cash we have received? 1980 rupees. In order to close the balance, how much should we post in our journal entry? 2000 rupees. How much is the difference? 20 rupees. What is the 20 rupees? It is the discount we have allowed to us, allowed to them. That is how you pass all the journal entries. Uh, okay. Purchased plant from Mukesh for 5,000 and paid 100 rupees as cartage for bringing the plant to the factory, another 200 for installation. Basically, right, just understand this. Mark this 5,000 plus 200 plus 100 is comes in the uh, plant account itself, not separate account. Why? You will understand later. Plant account 5,000 to Mukesh 5,000 to cash 300. Paid. Okay. Sold goods. This is easy entry. Insolvent means I forgot what is insolvent. Insolvency, bankrupts. Dates. Rahim, where is Rahim? 600 Rahim. 600 could only pay 50 paise in a rupee. Okay. In 1 rupee, he pays 50 paise. For 600 rupees, how much does he pay? Just cross multiply. What is this? I'll just tell you the logic. For 1 rupee, 50 paise he pays in the place of 1 rupee. For 600 rupees, how much does he pay? Or another way, 600 into 50% or 50 paise. Okay, bad debts. So what is the journal entry for bad debts? Bad debts is an expense for us. Bad debts is an expense for us. 300 is the cash he pays to us. Bad debts is the expense he is not going to pay because of bankruptcy. To Rahim 600 to close his account, he put 600 amount. This is the journal entry. Just to pass this post is in the lecture. For example, purchase to cash to discount. Where is purchase? Purchase to cash to discount. What is the amount for cash? The amount we have paid in cash. What is the amount for discount? The amount of discount we have given to them. This is how we do question number 2. I think last somewhere the illustration number 3. I will after and later on I will just provide give you short video of illustration number 3. Keep this as pending for the time being, but it is important as it is quick. And this chapter is done here. Where did I exactly write? I must have noted this somewhere. God, why is this empty? Oh, so since lectures is done except for one question, for illustration number 3, because I lost it somewhere. Mm, let's just go to the another chapter. I mean another blah blah blah. Yes. Trial balance. What is trial balance? It is also a phase of accounting process. Do you remember accounting process? Journal entry, lecture, trial balance, financial statements of final accounts. This is the process. Trial balance is also a phase of accounting process. Basis for preparing final accounts. It is the basis for preparing final accounts. It checks the arithmetical accuracy of books because trial balance, debit side and credit side will always tally. Okay. Ledger balances on a particular date. On a specific date, we can be able to find the ledger balances. This is the format for track balance. Like I'll just briefly explain. Ledger account or particulars, debit balance, credit balance, serial trial balance as it. We'll discuss all this theory later. Okay, just to go to the practical. What is there are certain methods in the trial balance. Okay, see, this is the format for trial balance. Serial number, particulars, debit balance, amount. Always, whenever there is amount, just to write the rupee symbol and credit balance amount. There are three methods of trial balances. First one is total method, balance method, and total and balance method. Just T, P, TB. What is TB? Trial balance. What is T? Trial. B, balance. Or T, total method. B, balance method. TB, total balance method. Total and balance method. I will just clear this because there is a lot of explanation here. Basically, I will just briefly tell you the differences and you do the solution by yourself, first of all. And second, I will just give you tips. In total method, uh, okay, anyway, I will just explain you the illustration. Illustration number 1, they have given you around 10 closing balances of lecture accounts. These are the lectures, okay. This is how we prepare, right? Even they have not done general story, etc., etc., because it is important in the specific unit itself. So, cash balances, these are all balances. Is cash balance an asset? Yes, it is an asset. Furniture, asset. Salaries, expense. Salaries we pay, not salary we receive. Sham account, we do not know yet. Purchase account, expense. Purchase return, income or credit balance, indirect income. Ram's account, we do not know yet. Sales account, income. Sales return, expense. Capital, etc. So just write the list of the accounts. Okay, first of all, step number two. This is step number one. Step number two, debit balance, debit balance, debit balance. Sham has to be, we don't know yet. Debit balance, credit balance, debit balance, so credit balance, debit balance, credit balance. Okay, this is the first one. But this is the first step, just to write the list of accounts. Secondly, in total method, if they ask you in the exam, in total method, just to write the totals of debit balance, 35,500. And remove this in the totals of credit balance, which is, forget the calculator again, 35,500 minus 7,500. 27,500, I guess. 26,500, I don't know. Okay, 28,000. So 35,500 and 28,000. There are both debits and credits. For furniture account, furniture is a debit balance, asset which is debit balance. This 3,000, just write 3,000 here. Just basically just remove two balance carried on and write all the, what are all the balances as it is. Two balance carried on, purchase by purchase, Sham by purchase to Sham. So Sham is a credit of. So 25,000 credit balance, remove this 21,500 debit balance, Sham. 21,500 debit balance, 25,000 credit balance. For total balance method, remove balance carried on. Okay. Just purchase account 26,000. Sir, how do we know whether we are going to write in purchase debit or credit? Just watch this here, bro. Purchase returns, debit to balance carried on, no, credit, fine. So in purchase returns account on credit side, write 500. Then trial balance will automatically tally. Doesn't even matter. Is a debtor. Sales. Remove this 30,000 and credit balance 25,000. 30,000, 25,100. Sales 30,500 is a balance carried on. Remove this 30,500 here. Credit balance is 30,500 credit balance. Okay. Sales return account, remove this 100. Capital, remove this 10,000 and 500. 500 is debit balance, 10,000 is credit balance. 500 is debit, 10,000 is credit. If you do this way, you are going to tally the balance, trial balance. And then there is balance method. Sir, what is this? Basically, just understand in total method, remove to balance carry calculate all, but ignore by balance carried on and to balance brought down. Means by balance or to balance carried on, not brought down. Ignore these things and ignore only balances and total all debits and credits. Okay. Okay. This is total method. Balance method is something which is literally easy for you. So balance method is the only only write this, okay. But here apply the logic where we write by balance carried on the deficit. Wherever there is a deficit, there we cover up with by balance carried on. Okay. Since there is this is, do not presume that this is credit balance. It is not. It is debit balance. We are just filling this up to tally here. Okay. So just to write whatever we have crossed 2,500, 3,500, etc. etc. 2,500, 2,500, 2,500, 600, etc. This is very easy. And then total and balance method. This is very, very easy. Just totals and in just totals and balances. Method number two, method number one. Serial number, heads of account or particulars or lectures, debit, credit, debit, credit. Okay. And you know what? Trial balance chapter is also done. I don't know whether we like it, but it is done. Except for questions. If whenever if trial balance does not tally, which do not occur at all. I am pretty much sure about it, but thinking of old ways, if it does not tally, use suspense account. What is suspense account? Suspense. It is the account which we use as a filler. We know one side of the entry. On the other side, we use suspense account since we do not know about it. Illustration number 3. Let's say common illustrations are there. 4, 5, 3 or 4 questions are pending. Just to classify the accounts, capital credit balance, sale credit balance, or how do you know capital is credit balance? Just to remember the cross capital liabilities, assets, etc. And above we get P&L. Okay. Purchase debit balance, sales return. Sales is credit balance, sales return is debit balance. Discount allowed. Allowed is an expense debit balance. Expenses debit balance. Trade receivables. Receivables, it is an asset debit balance. Trade payable, it is a liability credit balance. Investment, it is an asset debit balance. Cash in asset debit balance. Interest received on investment, it is an income. It is an income. Interest received, not investment itself. It is the interest received on the investment. Insurance paid, expense debit balance. If you write this, you tally. Do not write in this way. Write in debit, credit. Write in this way only. Okay. Yeah, we get confused with the different performance. Oh, here is the thing we are going to start loving this unit. One of your clients. Oh, by the way, talking of clients, income tax due date is on 31st December for ITR 1 and 2. So, what do you mean by ITR 1 and 2? Even I don't know. They just told us about it. If you fall under this category, please let me know if you have not yet filed the return. Ask you to finalize his account for the year ended 2022. Till date, he himself recorded the transactions in the books of accounts as the basis of audit. So on so fund issued with the following statements. The closing inventory is 574. Claims that he was recorded every transaction correctly and tallied. Is it really correct? Let's just check. Capital is credit balance, right? He is right. Drawings is debit balance, he is right. Lease only basically rent is debit balance because rent is expense. Right. Sales credit balance right. Due from customers. What is this? This is debtors. They are due to us. We are due from them. Okay. This is debit balance. Debtors are debit balances, right? purchases, right? Debit balance, purchase returns. Is it really right? Purchase returns, right? 264. Let's just check. 264. Loan from bank, debit balance. Trade payables, it is a liability, it should be credit balance. Trade expenses, expense. Trade payable and expenses are different. Trade payables means creditors. Trade expense means direct expense. Cash in hand, cash at bank, okay, assets. Bills payable, credit balance. Salaries and wages, expense and debit. Inventory, debit balance. Rent and tag rates, debit balance, right? Sales return, sales is credit balance, sales return is debit balance. Okay. If you do this, you tally. Question number 5. After this, there is only one question case, and we are going to end this video here and upload. I'm going to upload it. Afterwards, I will complete the remaining portion of the chapter. Let me check whether I'm visible. Following trial balance also drawn from so traders. Both sides agree, but it contains certain errors. Building asset, machinery asset, debit balance, return outward. Basically, I will just briefly tell you. Goods. I'll just tell you the thing. Return outward means if you return and goods are going outside, it means just think of it. When you are returning, when are you returning goods? When we purchase and then we return goods, right? So it is a purchase return. The goods are with us, we are returning the goods, and those goods are going outside of our premise from our premises. So it is a credit balance. Purchase is debit, purchase return is credit, bad debts debit balance, cash debit balance, discount received asset, sorry, income. Bank overdraft. Basically, it is a short-term liability, so it is a credit balance. Credit or trade balance purchases is right. Capital is right. Fixtures, asset, sales is credit balance. It is good, well and good. It is wrong. Debtors, uh, interest received, income. It is right. Input GST. Remember in the previous video we talked about this. Whenever there is input, it is an asset for us. So these both are debit balances. Even input GST is a input IGST is a debit balance. Output is obviously credit balance. So these are the mistakes they have done. Basically, they have done every possible mistake. Corrected trial balance. And then the question number 1. Inexperienced bookkeeper like me has drawn trial balance for the year ended so and so. Draw up the corrected trial balance debiting or crediting any residual letters to a suspense account. Basically, this is the question which could be tricky because it does not tally in the real time. Let me check. Yes, it does not tally. We have to make them tally by by posting in suspense account. Okay. Basically, provision for bad debts. Provision for bad debts is a liability. Okay, keep this in liabilities. There are provisions also. Remember, in our childhood, we have read about contingent asset, contingent liability, and provisions. Contingent asset is not recognized in financial statements. Contingent liabilities are not recognized in financial statements, but are disclosed in the notes to accounts. And provisions are recognized in financial statements. What do you mean by recognition? Basically, it is shown on the financial statements. What are financial statements? Balance sheet, profit and loss, notes to accounts, cash flow statements, and the statements of changes in equity. I'm going to first time. Basically, provisions are liabilities. Bank overdraft is credit balance, trade payables are credit, trade receivables. Wait, sorry. Okay, till here. Trade receivables, debit balance, discount received, credit balance. This is wrong. Discount dollar, this is wrong. These both are wrong. Drawings, debit is right. Office furniture is an asset, it is debit balance. General expenses is debit balance, but is shown in credit. Purchases, debit balance. Return invoice. Okay. Whenever we return invoice means when the return is happening and the goods are coming to us. When does the good come to us? Let me rephrase it because it is awful English. When do goods come to us? Goods get returned to us. when there is a sale and when we are returned. Rents and tax. So sales is credit balance, the return is debit balance. Rent and rates, expense, debit balance. Salary, expense, debit balance. Sales, credit balance. Inventory, asset, debit balance. Provision again is a credit balance. So whenever we classify this, there will be one amount which is less. Here debit balance is less and it is thrown to the suspense. So trial balance is done and there are three more chapters: subsidiaries, cash book, and rectification of errors. Let me rephrase this. Okay, basically I will tell you just a couple of minutes. So what is the date? Today's date 28, right? 2807. We'll be done with chapter 2 plus this. T3, 6 for pending. For 29, 30, 31, we'll cover chapter 5 and chapter 7, which is final accounts. 3107. 8 and 9 are my favorite. Basically, these three are my favorite topics, and we are going to complete this by 3rd of August. After this, I will take a day to complete BRS and then start partnership accounts. Okay. And after 7th, by 7th, the technicals will be done with partnership accounts. By 8th, I will complete what is this? Base of exchange. From 9th to 12th or 13th, will be done with fund accounts. Comment me below. Comment below for exam before marathon or quick revision series. After syllabus, we'll try to cover all throughout first MCQs and 20 field. Okay. Boy.